Joining us now is Baird senior research analyst Will Power. Will, always good to have you. It does appear the revenue guidance in part reflecting that potentially weaker than expected SMB trend. What is your take on all this? Is the market overreacting to it?
Hi, David. Good morning. Thanks for having me. Yeah, I mean, tough sledding out there today. Clearly, the shares are feeling, some Zoom fatigue, like many of us have, I guess, in real time. Look, at the end of the day, we still like the longer-term platform opportunity, but as you know, the market, shoots first and asks questions later, and then there are some legitimate questions, right? I mean, they are seeing some pressure in the SMB segment, particularly in Europe. It sounds like that started to impact them a bit more in the latter part of the quarter, so I think it took them a bit by surprise. SMB is something that's been closely watched for some period of time. I mean, historically, that wasn't the principal focus of the company, but with the pandemic, there was a lot greater demand among customers of all sizes, and now it's coming back to bite them a bit. But the good news is, the bigger business segment continues to perform, quite well.
Yeah. All right. So what do you point to sort of say the bigger part of the business is doing well? And I'm curious as to how you then back that to where we are in the stock right now and whether 291 is an appropriate price.
Well, look, as you think about, the 500,000 plus customers they have that have 10 plus employees, that's really the focus for the company. And increasingly, companies generate, $100,000 in annual revenue. As you think about that larger customer cohort, the so-called net expansion rate, or think about, same store sales rate, those customers are still growing, 30% year over year. And that's a function of growing video adoption within enterprises as they displace legacy providers. But it's also Zoom Phone, which we think is still really early days. They added another 500,000 Zoom Phone seats just in the last 4 months to reach 2 million in total. That barely penetrated their base. And look, the longer term bet here, the reason we like the stock on the weakness is this is a building platform opportunity, right, for them to cross-sell additional products into that large and global video base.
That's a question I wanted to get at strategically, Will, just because, there's a company called Microsoft that also wants to use this type of video communications platform as an element of a wide suite of services. So what do you think right now, coming out of the pandemic, when people are just less furiously in that mode of just, getting access to video conference capabilities, what the market share situation is going to shape up as?
Yeah, look, that's a great question. And I think there's room for both of them. I mean, there's no question Microsoft's a juggernaut, and so is Microsoft Teams. As you look at the monthly active user figures that they've disclosed, a lot of that for Microsoft has been around, collaboration. We've done our own survey work on a regular basis, and it has become a two-horse race, right, between Zoom and Microsoft. And not every firm is going to use Microsoft, and even when they do, they may use Microsoft for some functions and still use Zoom Video or even, Zoom Phone in other areas. And so these are the two that we think will probably continue to take share from a lot of the legacy providers, like Cisco, maybe a smaller LogMeIn and others that have been in the marketplace. And as you look at the numbers, especially up market, Zoom's continuing to gain very good traction.